Bill, in your role, you spend a great deal of time with customers. Can you give us a sense of how customer needs have changed over the past year?
As I look back on 2009, buying behavior shifted from big enterprise solutions to pinpointed mission-critical business solutions that had a very quick return on investment and a fast fuse to value. So it was all about good business solution tied to good business case wins.
As we see the market economy returning, do you think we can expect a return to business as usual?
Business as usual is simply, completely, totally new. The new reality took place in 2009. The good news is much of the cost cutting and the efficiency has been driven into the market economy already. CEOs have no interest in repeating the discussion on Lehman and the crisis. They instead now need to focus on market share, on their customers, on innovating their business model, on innovating their products, on reaching into new and diverse markets and new ways with new partners to drive growth. So this year, if we want to grow, we have to put our minds together and really focus on the business strategy of our customers. Align that with a clear IT roadmap tied to a business case that delivers clear business outcome, and then we have to keep the promise by making these customers successful each and every time.
As you look back on 2009, Bill, what was the one highlight that stands out for you?
The most important thing we learned is that the independence of SAP's business software model and the convergence of what we do around our product, around our customers, and around innovation and delivering real value to our customers is tremendous. What we did together was quickly responded to difficult times. We innovated around industry, new value propositions, fast cycles to value that were mission critical to our customers. We delivered them based on the role the customer had in the organization. And I believe we took your business model, combined it with SAP's business model, and upped the ante on true customer value. It was a thing of beauty to watch and be a part of.
Over the last few weeks, you've been in Beijing, San Diego, and Nice talking about our go-to-market strategy, really being focused on three things: volume, value, and strategic growth markets. Can you explain what that means?
2010 is a year of growth. We intend to grow our business in double digits, and we will focus on software and software-related services. We will open up to the ecosystem, and we will deliver to more and more customers in different industries and different markets worldwide. I would very much like to reach out and put a gavel on the table today and say, together, let's move forward with the idea of growing our businesses together. Let's focus on those industries or those sub-industry market segments or those product zones or those line of business buyers where you have the expertise. And let's deliver by working as one team to deliver that business outcome that customer's counting on us for, and let's execute each and every day, week, month, and quarter. And in the end, we'll have fast-growing businesses, and we'll move this entire IT industry together. In the area of volume, we need to do more transactions to different buyers within the line of business in each of the customer enterprises. Sometimes we'll use telesales. Sometimes we'll use marketing and various channels and routes to market that you have and that SAP has. But most of all, we'll pre-package ready-to-run business solutions where the customer can grab them quickly, immediately drive to a value outcome. That's our volume goal. In the area of value, when you think about a customer's strategy, it's always harmonized around a clear IT roadmap. It's tied to an ironclad business case. And then the way in which we deliver the insight, the user experience, and that business outcome is all about value delivery and how that value is, in fact, delivered. We, meaning our partners in SAP, need to do that on an end-to-end basis flawlessly. When it comes to markets, we are going to see the emergence of our big markets again around the world, or our core markets, and we need to execute in those and grow those in double digit. But when you think about the BRIC countries, Brazil, Russia, India, China, Middle East, Africa, fast-moving parts of Latin America, We need to put our minds and our investment together and go after these markets more aggressively than ever before, because that's where the triple-digit growth can come if we play our cards right.
Great point. Hans-Peter, over to you now. Bill mentioned volume focus and SME as a key part of the SAP go-to-market strategy. Can you share with us just how big of an opportunity this segment represents to SAP and our partners?
The opportunity is big. I can take that as the first answer. But SAP is already the leader in the business software market and has an overall market share of 23.5%, while in the mid-market space, our market share is at an impressive 26%. So we all know in 2009, global IT spend decelerated, and now in 2010, the analysts predict it will grow again. So we need to make our offerings more relevant. That means it needs to be more affordable, more predictable, and a very, very quick time to benefit.
Now, we've heard a number of people say that partners are key to success in the SME market. How much have our partners helped us accomplish in the SME line of business?
Because of our partners, we have been able to triple our SME customer base in the last 3 years. So by the end of 2006, we had roughly 23,000 SME customers, 24,000. Today, we have over 73,000 SME customers from SAP. So that's over 75% of our customer base is in the SME segment, and 60,000 of them are in the segment below, on the size, below $500 million US.
Very impressive. So what guidance do you have for SME partners to make 2010 a successful year?
Both Business All-in-One and Business One have been consistently positioned on their very reliable for the SME business. They're extremely competitive, they're extremely high win rates, and they're well positioned in the SME market, as you could see with the figures before.
But are there any new things coming up that our partners should be excited about?
So in Business All-in-One, we move into subscription-based pricing and models together with our partners, so partner-managed hosted solutions offered in user-per-month manner. We moved into that. We already made progress as we announcements out there. And also, of course, on the product side. So Business All-in-One, new user interface based on NetWeaver Business Client 3.0 and integrated BI analytics. But also, Business All-in-One can address and has addressed the needs of subsidiaries and affiliates of large accounts to transform their business networks. And don't make a mistake. Subsidiaries and affiliates, also mid-market customers have subsidiaries and affiliates, and they want to build their business networks. Business One is our entry offering into the small enterprise market, and it's our entry offering into the SME portfolio. In the new release that comes out in April 2010, we have redesigned the graphical user interface that improves the user experience and accelerates adoption, quick adoption. So you don't ease of use, you don't want to have long learning phase, you want to have quick adoption. And of course also in Business One, embedded reporting analytics with Crystal Reports and Excelsius is extremely important to this customer base.
Hans-Peter, you mentioned business intelligence as another area of focus. What advice do you have for our SME partners in this area?
I think it's very clear. Business intelligence, our business objects offering, is very, very important also in the SME segment. And our customers, our SAP customers that bought business software ERP system, actually they want business intelligence on top of it, on the side of it, to make the right decision. So actually to get into the accounting department, the line of business managers, and to turn actually what they have on facts, on data, into insights into their market and into their customers. And it